Hey guys, today I found a new post from Reddit from a user named Meta Beta Cola. It says that sell vehicle with positive equity to buy a used car outright and reduce my monthly cost. I have a vehicle with $9,000 in positive equity. I only use this car to make quick trips around town, maybe 3 to 7 times per month. Looking to ditch the monthly payment and use the equity to buy a cheap used car outright. Details: monthly expense, monthly payment $300 per month, owes 14,000 on it. Have an offer from a dealer to buy it for 23,000, interest 2.5%, payoff 48 months left. Looking to buy a used Toyota with 100 to 150,000 miles outright. Does this make sense? And I will say, I know this is a kind of like a Dave Ramsey advice type of thing, where get rid of the debt, sell the vehicle, take the cash if you have it, and then use that to buy. I think he calls it a hoopty, right? For 1,000, 2,000, 3,000, you can buy cash outright, and drive that around as long as you can, stuff like that. But I mentioned this before, where I kind of disagree with Dave before, where I don't know if that's a good advice for most of the people, because I'm not a mechanic by any means, and I don't know the first thing about vehicles, and I don't, quite frankly, I don't have really time to do the research, to the uh, really try to get under the vehicle and stuff like that, to do all that stuff, because one, I know I can't do whatever it is that I need to do within so many hours. So that means it's gonna take days and days and days. And obviously, for me, I need a vehicle on a daily basis. In your case, you mentioned that you only need a vehicle, so what, 3 to 7 times a month, which is not a lot, right? So obviously, one, you don't use a vehicle for a commute, uh, and if that's the case, and I don't know what your living situation looks like, but I don't know if you have a lot of friends around, maybe family around, maybe coworkers around. So maybe a few times that you do go into work or something like that, maybe you can kind of share the ride with them, where you can kind of save a whole lot of money there. My suggestion is that kind of take a look to see, do you really need a vehicle, right? If that's the case, you only need it for 3 to 7 times a month. So if you're at a place where you actually don't need a vehicle, maybe you can do that. Utilize your friends and family, or if can Uber around for pretty cheap or something like that. I would say you may not need a car, so just sell the vehicle, keep the money, save as much as you can. Obviously, you're saving $300 per month just on the car payment. Also a little bit on the insurance as well, and a little bit of gas and stuff like that. That'd be an ideal situation. Um, you know, I just don't like the idea of having purchasing a car that's 100 or 150,000 miles on it, and you never really driven this car. Like, you never really own the car. You don't know what's wrong with it. You don't know why they're selling it and stuff like that. And that's typically when people sell it, is because that's when they kind of see it as, okay, this problem coming up, this problem coming up. I know I gotta do this soon. I gotta do this soon. And so all the cost of ownership goes up significantly, right? And if you weren't the one, if you weren't the one that's been driving it for the last 50, 70, 100,000 miles plus, then it's very difficult to know what needs to be done, really, right? I mean, you could always ask the seller to kind of show it, but if they want to hide it, how would you know? Especially if you're not a mechanic and if you don't know what you're looking for. So, you know, my suggestion is that, again, if you don't need to have it, right? If you don't need it, then don't get it. But if you say, hey, you know what, I do live in, a little further out, and that 3 to 7 times that I need it, I do really need it because I drive a lot, and Uber and stuff like that is available, but it's just, the cost outweighs, whatever. If that's the case, and if your goal is to try to save $300+ per month, my suggestion will be actually keep the car, and maybe do like find different ways to maybe earn a little bit more money, like $400 or $500 per month, because obviously some of that needs to go towards taxes and stuff like that. Um, But maybe you can do like a Uber yourself, and maybe a DoorDash or something like that, where you can deliver, you can utilize your vehicle, and help you earn that extra money, where you can pay for the car payment, pay for that extra gas if you need to, and stuff like that. But rather than selling the vehicle, get rid of it, I think really the option is to maybe do that to kind of help you increase the income. And then once it's all paid in full, if you want to continue to do that to kind of earn a little bit more money, you still can do that. So I would say, again, if you don't need a car, maybe get rid of it. If you do need a car, maybe find the ways to kind of increase your income in a way or another. That way you can actually keep the vehicle, keep making the payments, maybe pay it off even earlier. But you have, again, more flexibility with that. Uh, and the other way to kind of think about it, again, I thought about this many times, is that, like, typically speaking, and I can say this because I used to work for a car dealership, I know most of the lenders, I know there are some other lenders who will do this, but most of the lenders won't let you finance a vehicle that has 100,000, 150,000 miles on it, just because it's got too many miles, right? You will find a lender who will help you with that, but in most cases they don't. And they don't like to finance a car that's X amount of years old or older. And the reason for that is because that's a little bit too much of a risk for the lender. And their job is to take on a risk, right? Of course, they have to kind of assess it and see. And at some point, they're saying it's not worth it for them to say, I'm going to lend you this money for you to buy the vehicle, right? If the lender says, we don't feel comfortable lending you the money, why should you take on that full risk yourself using all of your cash that you have, right? So, like, I just don't know if it's a good way to, manage your finances if, of course, you're not a lender. You don't have as much money as they do. You don't have, maybe you have a higher risk tolerance than they do. But, typically for me, like, the way I look at it is that if the lender, their job is to take on the risk, says this is too much of a risk, I think I will go with them and says, okay, you know what, maybe that is too much of a risk. Maybe it's not the right thing for me. So hope that helps. Hopefully that kind of makes sense. And maybe you can hit the like button, share your thoughts, and subscribe. Thank you.